Ladies and gentlemen, good day and welcome to H1FY26 conference call of Beta Drugs Limited, hosted by PhillipCapital PCG India. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sri Surya from PhillipCapital. Thank you, and over to you, sir.
Good afternoon, everyone. On behalf of PhillipCapital PCG, I welcome you all to the H1FY26 earnings conference call of Beta Drugs Limited. Today from the management, we have Mr. Rahul Batra, Chairman and MD, Mr. Nipun Arora, CFO. I now hand over the conference to Mr. Rahul Batra for his opening remarks, and then we'll open up the floor for the question and answer session. Over to you, sir.
Thank you, Mr. Surya. Dear all, a very good afternoon. On behalf of Beta Drugs family, we wish you all a very happy Diwali and a prosperous New Year. Before we begin, I would like to share that today we have got a call from NSE, and they have said that they will be giving a principal approval to migrate to the main board. So by next weekend or maximum 10 days, we'll be migrating on NSE main board. To start with, we would like to share the numbers. The total sale of the company is 204 crores as compared to 180 crores last year of the first half FY25. Although the growth is 13%, but there were some factors by which the production was a challenge for good 15-20 days. There were bad rains across North India, and we had 2 audits that was from Mexico and Colombia, which took 12 days as we were going for a complete plant audits, and it was done successfully without any critical observations. The EBITDA margins rose by 17%, that is to 47 crores as compared to the first half of FY24-5, which was 40.3 crores. The EBITDA margins grow from 22.36% to 23.08%. The major achievement this in first half is the Derma division has generated a positive EBITDA of 11.32 lakhs in the first 6 months. However, if we exclude the dermatology EBITDA margins, the total EBITDA margin stands at 24.12%. The PAT margins, if we exclude one-time interest of the convertible debentures, stood at 14.10% as compared to 13.55% last year. The PAT numbers are rupees 28.71 crores, that is excluding the interest on debentures, as compared to 24.3 crores last year. The total PAT has increased by 18% as compared to last year, that is excluding the interest on convertible debentures. Now, coming on to the key highlights of the first half. At Beta, we have successfully completed a COFA press audit, that is Mexico, and parallelly have also filed 16 doses and in process to file 15 more doses in the next 6 months in Mexico. We have successfully done our first in-licensing with an Italian company to get the fillers in the aesthetics market. We are the first and the only company to get approval of a first NDDS of methotrexate oral solution in India after a long effort of our 3 years. We have recently acquired a new facility for further backward integration to produce our own intermediates and further strengthen our DMFs and reduce our dependency on the China market. We have also cleared INVIMA audit for injectables and are ready to file 10 doses by this year end. Now I'll take you to the different verticals. First, coming on to our own brands. The own branded business has shown a growth of nearly 20%, approximately 20% as compared to last year. The top 10 brands have contributed more than 50% and will continue to grow at the same pace. There is the single molecule, that is Texfila OS suspension, which we launched last year, is now close to a 10 crore brand with a larger prescriber base. The orals have contributed 48% of the total own branded business, which is again a very positive sign for the company. There are total 6 brands which will become a 5 crore brand this year. The total number of prescriber base has increased by approximately 8% in this first half of the year. Coming on to the exports now. Although the growth in exports has delivered 10%, that is from 39.7 to 43.2 crores, but this will totally change in the next half of this financial year. This half, we have filed more than 80 new doses in different geographies. Total of 43 new approvals across different geographies, especially Colombia, Central America, Jordan, Philippines, etc., has open access to bigger market share. We are in a process of doubling our regulatory team and to file 150 plus doses in coming 2 years. We have allocated certain budget to do all the bioequivalences for the 11 identified products in orals and apply for the registrations in the regulated markets. The Europe approval has been delayed for long, but finally it will happen in the first quarter of next year, that is between January and March. The preparations of the doses and the developments of products for Europe market and all the regulated market has already started. We will be the first cytotoxic suspension plant to be inspected by Europe, which will give us an edge as a premier cytotoxic player globally. Coming on to the CDMO. The total sales of CDMO has shown 8% growth over the last year. We have added many new products with our current partners. With increase in capacity at Adley formulation plant and being backwardly integrated, BDL poised to become the most trusted CDMO partner in India. By ensuring best of our quality, timely deliveries, BDL is always a preferred choice for CDMO. Now coming on to our API. The API sales has shown a growth of 14% as compared to last year, and this will continue to grow in the coming years. At Adley Lab, we have increased the number of people in R&D to support the new development across cytotoxic segment. The first international audit from Mexico has been completed and the CAPA has submitted to get the approval. We have recently acquired, as discussed, an new intermediate facility to further strengthen our production, quality, most importantly, the DMS, as we are planning to enter the regulated markets. 2 new products have already been delivered to the formulation plant in this half and will be ready to launch this year. We are also developing 4 new products which will be given to the formulation to be launched in next 2 years. 3 new products have already been developed at API plant and given to formulations for which the DCGI filing has already been done. Coming on to the cosmetics and derma. This half, as we discussed earlier, the division has become profitable and has grown by 45% as compared to last year. We have signed and registered our first in-licensing product, which is the key to the growth for the coming years. Further, the RX, the prescribers, have grown almost by 70% in this half of 26 as compared to last year. We are also registering some mesophils, which is again a niche market to be tapped and will further drive growth for this division. Going ahead, Beta has planned a robust portfolio both in onco and derma. In oncology, we are expecting 2 more NDDs to be launched next year, which will be again the first time in India. Also, we have filed 3 new drugs, which the API has also developed in-house. This will give us a driving growth for next 3 to 5 years in the domestic market. As the main focus lies on the export side, we have planned everything and now the execution has already started and the prioritized to make our presence in the regulated markets. Simultaneously, the growth will also be derived by the API sales in the international market. Now, we welcome all your queries and questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Astha Jain from Peak Day Advisors. Please go ahead.
Hello. Thank you for the opportunity, sir. So my first question is with respect to the gross profit. So your gross profit margins were down by 3% if I exclude the other income. So what was the reason for that?
Nipun?
Hi, Astha. This is Nipun. See, our gross margin on a consolidated level is not less than, I think, it is between it is 1.5% less than the last year. This is basically because of the product mix only. I mean, in CMO, some products are there which we cannot keep it constant every time. Some price erosion is there, something like that. So it is just because of product mix. It is not more than 1.5% dip. So last year it was 52.8, and now it is 51.35%. And other income has no role in this.
So, sir, in my understanding, I understand that our contribution from domestic-owned brands was approximately 34%. CDMO was 39%. International was 21%. API
No. I'll rectify it. I'll rectify it. If I talk about EBITDA margins, our EBITDA margins from the branded business is somewhere around 35-36%. From the CDMO side, it is 16-17%. You said, I think, more than 30%.
No, sir, I was saying the revenue mix. I was talking about the revenue mix because you said that the gross profit margins were down because of change in product mix, right? So, segment-wise...
What I mean to say is, like, you cannot keep it constant anytime. Sometimes a product which is sold is carrying a bigger margin, carrying a higher margin. Sometimes the product is carrying a lower margin. So you cannot keep the product mix same every time.
Nipun, I'll take up from here. Asa, actually, CDMO, you have seen the sales have grown by 8%. So sometimes what happens is, like, there are demand come for platinum groups, right? So for platins, to continue the business with all the partners, you have to supply all the products. And for particularly those products, the margins are very less. So that's why there might be slight difference between the GP margin. Otherwise, if you see on the export side and the own branded side, the GP margin rather have increased by addition of a new products.
Okay. So can you just give me the segmental revenue mix? I mean, from CDMO, how much was the contribution to the total revenue from domestic, from international API and dermatology?
Okay. So I'll give you that. I'll give you that. So out of the 204 crores, 60 crores was branded oncology. CDMO was 79 crores. Exports was 43 crores. API was 12.25 crores. And Derma was 9.25 crores.
Okay. So, again, sir, my question goes to that if we are getting, so that comes to my revenue mix in percentage terms. CDMO is 39%, domestic-owned brands is 34%, international is 21%, APIs is 6%, and dermatology is 4%. And the margins you have said, for CDMO it was approximately 16-17, domestic is 35% approximately.
16-17% is EBITDA margin, not GP margin.
Yeah, I'm going to EBITDA margins. So our EBITDA margins have also come down. I'm assuming that has been flown from the gross profit margins.
No, if you see our EBITDA margin has grown from 22.36% to 23.08%. Rather, they have come up. And if I exclude dermatology, it is... Yes, sorry?
Okay.
Asa, I think there is some doubt on the EBITDA margins. We have given everything on the presentation. The entire numbers are there. You can just have a look once again because as per our information, as per our thing, the EBITDA margins have rose as compared to last year.
Okay. So my second question was with respect to the international business. So we have grown only by 10%. What was the reason for that?
So the international market globally, it is dominated by tender business. India is the only market in oncology which it has a private business and a tender business. So globally, 90% of the market is tender business. So the most of the tenders tend to come in the later half of the year. So that is between October to November. So the award goes somewhere in December. So the sales will reflect generally from January, February and March. So that's why when I made an announcement, when I was telling about the export business, I clearly said that you will see a different picture altogether in the second half.
Got it. Understood, sir. Thank you.
Yes. All right.
Thank you. The next question is from the line of Avnish Barman from Vicaria Consultants LLP. Please go ahead.
Yeah, hi. Good afternoon. Thanks for taking my question. Rahul, if you can just, on the Platinum business, if you can just quantify how much of the Platinum business do you do in the three segments, which is the third party, the brand, and the exports?
So, Platinum business, especially on every aspect, we tend to do very less. But still, no chemotherapy is covered without Platinums. So if a patient goes to a doctor, the basic protocol starts from a Platinum only. So we cannot avoid giving a Platinum to anyone, whether it's in the CDMO business, whether in the exports, whether it's in the own brand. So the quantification of a Platinum business, we cannot give it to you right now, but Platinums we cannot deny. It is like a basic. Supposingly you're going to a dermatologist, supposingly you're going to a cardiologist, they will always give you PPI along with any medicine. So this is a basic protocol. It starts from, even you go for immunotherapy, anything, so Platinum has to be given.
Yeah, so
what we do is that we sometimes supposingly the demand is for 10,000 vials. So we tend to give only 2,000, 3,000 vials only. So this is how we are controlling our margins, in spite getting a growth in the sales also.
Yeah. No, I was trying to understand, if you look at your overall revenue, what percentage contribution would be coming from Platinum? So
it's not more. It's not more. It's less than 5%, 7% only.
Okay. And out of the 7%, I'm assuming it will be divided into the three segments. In what part are you able to pass on the increase in, let's say, Platinum prices, and in what part do you have to kind of absorb it in your P&L?
So, increase in prices, we have to part from every division. It is not only that own branded we can increase the prices. Everyone understands in this dynamic market that if the prices are increased, they have the prices, manufacturer cannot bear from their own pocket. So we increase the prices, but yes, the GC we earn in the other product where it is 60%, 70% or 50%, the GC comes down to 10-15%. So that is the only thing. But see, this is only about Platinums, right? We are talking. But what about the new innovation, new products which we are including which we are launching now? So every product has a cycle. So once you launch a product, first year it is always low. Second year it picks up the pace. Then third year that product will contribute more margins. So this will overpass the product which has less margins. And we, as a company, we are focusing on developing new molecules. We are launching new molecules every year. And this year, after this methotrexate, you'll see the picture change in the next half.
Right. Okay. And regarding the guidance, I mean, do you want to revise the guidance in the call? I believe the previous guidance was for about, I think, if I'm not mistaken, about 450 crores for FY26 revenue. Would you like to guide something on? Yeah.
So we never gave 450. We said we will continue to grow at 20 to 25%. Although this time the growth was only 13%, but we will be having the strong numbers for the next half of the year.
And any ballpark estimate on the EBITDA margins for the full year?
EBITDA margins will remain between 23 to 24 to 25%. Between 23 and 25%.
Understood. I just wanted some clarity on, whether there was any impact on the business because of the GST change that happened. And were there any lost sales in any business division? And if there were, will they be recouped in the third quarter numbers?
So the sales were stopped for 5-7 days, but eventually we have built them up, and there is no loss in the sales. Actually, the product is prescribed by the brand name. Even the hospital take it as a brand name. Second, GST is it's a benefit to the patient. It's not a loss to the company. It's just a benefit to the patient they have passed on. So if by reducing a GST rate, nothing has impacted on the overall business. Yes, the billing was stopped for 5-7 days. We were calculating, we had to give some advertisement regarding the revised GST rate so that the patient should not be charged more. But overall, the sales were not impacted. It was just halted for 7 days.
Understood. Last question from my side. Can you talk a little bit about this Italian product, the promote area, whether it's a single product, multiple products, what is the potential and what are the timelines that we are looking at?
So we have just got this. So we signed this in-licensing agreement last year, and then we started the registration process. So we just got the registration last month, and now we are conducting all the CMEs, all the CMEs to different doctors, and the doctors are joining from Italy to train the Indian doctors about using these fillers. So this is one. Then second, we are also in a process to register mesophils. So mesophil is one therapy which is being promoted in India as an unregistered source. So most of the mesophils are being imported from Korea. So this will be the first registered product in India which will be having some vitamins from the European company. So the total market size is close to what we estimate. Since it's a non catchable sales, it is not catchable as it is same like oncology. The total market size which we analyze is close to 1,000 crores. So we want to have, and we will have a very good market share in coming 3 to 5 years in this market.
And by good, it will be like between 10 to 20. Would you consider that a good market share?
No, 10 to 20. If it's 1,000 crores, so we should be having at least 50 to 100 crore market share.
Okay, 50 to 100 crore sales, you mean?
Yes, in the coming 3 to 5 years.
50 to 100 crores. Okay. Great. I'll join the queue back. Thank you.
Okay.
Thank you. The next question is from the line of Veera as an individual investor. Please go ahead.
Yeah, hi. The first question is when is the interest component on convertible debentures need to be planned for, number one. Number two, normally your H1 to H2 top line is flattish. So how do you see the current year? Though you answered that, the exports you would see a higher number this year, but that would normally be the case in the previous year as well. So if you could address some seasonality in the business between H1 and H2. And three, when is the EU audit, planned for?
Okay. So I'll give you all the answers. The first is the EU audit. So as I discussed earlier, so we are about to get a confirmation in December, by 15th to 20th of December, that our audit is planned between January and March for EU. Then the second part, you said the numbers remain flattish. No, that is not the case. Last year we did 180 and then we did 186. So it is almost, you can say, flattish, but there was a growth as compared to the first half of FY25 as compared to second half, right? So if you go to the last year also, last year, there was a big growth in the second half of the year. So what we expected, there have a lot of registrations which have come up recently to us in last 2-3 months. Like we also mentioned in our presentation that 43 new registrations have come up. And now the time of tenders have come, since I explained you that most of the tenders come in between October and December, because internationally the financial cycle is from January to December. So they tend to close their tender by December itself and allot budgets. So we expect a good run rate to come from the second half of the year. That's the reason.
Right. And, one last question. Where do you see your cosmetic / derma business over the next year? In a 5-year time frame, how do you see these things coming up? And how many SKUs we have right now? And are we launching more there?
So the total SKUs in derma we have is total around 24. And right now we are not planning to launch more SKUs. Rather, we are more concentrated on the current SKUs. It is about like the target is that each SKU should come up to certain value. If 70% of the SKUs will come to certain value, then we'll be introducing more SKUs. Now, regarding the target, like derma thing, we see between the sales between 30 to 50 crores in next 3 to 5 years.
Per year, you think?
Yes.
Okay. Yeah, thank you. And
Thank you. The next question is from the line of Puneet Mittal from Abiso Investment Advisors LLP. Please go ahead.
Hi, thank you for the opportunity. My first question is if you can give me some color on the oncology intermediate plant that you have acquired. So if you can share some more details on that, that'd be great.
So what we were doing earlier, we were scouting for a place where we can have our own intermediate plant, but that was taking a lot of time because of in India, the approvals of National Green Tribunal and the pollution becomes a very hectic and very big problem. So that takes around 3 to 5 years. So fortunately we got an opportunity where we have our own API plant right now, current API plant, like only 50, 70 meters away. We got a plant who already had the license. So we acquired that facility. And now we are just building up the facility. In next 6 to 8 months, our target is that we will be building up this facility and making our own intermediates. Apart from this, the process of developing from intermediates to the KSM from which we are already manufacturing the API has already started by R&D team. So the total capex involved in acquiring the plant that was around 9.45 crores. And there will be additional capex or requirement to build up the plant for plant machinery, everything. Additional will be around 15 to 20 odd crores.
The second question is if you can give some more color on, like, if we look from last year, first half 25 to 26 today, our fixed assets have increased almost double, just less than double. And so what are these additions on fixed assets? And along the same line, our borrowings have increased dramatically, and we still also have decent chunk of cash on the book. So what's the plan? Are we looking to reduce the leverage, or are we looking to deploy this cash for investments?
So the cash we have just kept it for the development of the new product. For further, maybe there can be an opportunity tomorrow for some inorganic growth also, and maybe there is an opportunity to have some good market for globally. So this is why we have kept some cash aside. There also we are planning to get in license with some biosimilars, so we have kept some cash for that purpose only. So regarding the fixed asset and borrowings, I'll ask Nipun to explain you. Nipun, can you please explain?
So regarding the fixed assets, we have already purchased the land and for the intermediate land, which you are seeing in the fixed assets, and some expenditure has been done on building also, which you are seeing in the fixed assets. Moreover, we have bought a land for corporate R&D center also, so that is also there in the fixed asset. If I see the total additions in this first half, this is somewhere around 25 CR in the first half. And you were saying about the borrowings which have drastically increased. In the borrowings, there are debentures which you are seeing. So, cash has gone out from the cash and cash equivalent side to these fixed assets, but the borrowings are still the same, which will be converted next year, June, and then you will see that borrowings have gone away.
Okay. Just along the same line, I think what you mentioned about biosimilars is very interesting, because that's something that I wanted to ask. If you have any plans to enter biosimilars, especially on biologics which are used post the chemotherapy that the patients undergo.
See, that's a very long discussion on the biosimilars. We are actually planning. We have initiated many talks. We are discussing many things. Rather, some things have been signed as NDAs also. So we are doing some things on the biosimilar side. But till the time it is finalized, or till the time it is done, announced proper, till the time it is done officially, we cannot give an announcement right now. But yes, since no oncology company is full without biosimilars, so we are into that area now, and we will be coming up with some biosimilars maybe in coming 4 years.
Okay. Thank you so much, and all the best.
Thank you.
Thank you. The next question is from the line of Pritesh from Lucky Investments. Please go ahead.
I couldn't clearly understand the reason for slower growth in first half. If you could tell what is your initial estimate of 20-25%, you grew 13. So if you could tell the reason, and could you tell the reason segment-wise, specifically in the international and the CDMO, what exactly happened?
So the first half, actually, I told you the plant, there was some. We had an order book. We couldn't process the orders by September. So 10-12 of crores rupees of order will be dispatched in the month of October and November. But the overall, the export market, if we see, as I told earlier, it is mainly a tender-driven market. So the first half of generally the first half of the year, you don't get too much of tenders. So the next half, if we see from October to December, in October only, we have filed around 3 major tenders. This month, we are filing 2 more tenders in different geographies. So that's why we know that from, as compared to first half, if we do 43, we will be crossing 100 crores of top line in exports for next half. So this is what we foresee. We have even in our annual budget, if we see, the exports target was this only, and we are almost close to the targets. And on the CDMO side, if we talk about CDMO side, the market is very dynamic. So if something has been increasing there, something has been decreasing. So it is totally depend. We have not lost even a single CDMO partner. We have added some. That's why there is some 8% growth in the CDMO business as compared to last year. There were total of 5% growth as compared to last year. So we have not lost even a single CDMO partner. Rather, we have add-on products only. So the total deficit, if we see, that is majorly from little bit from the CDMO side and majorly from the export side. So this will be covered in the coming half year of FY26.
This will be covered to meet your annual 20 to 25% growth, or this will be covered for a QOQ basis? So
to meet our growth between 20 to 25%.
Okay. Thank you, sir. Okay.
Thank you. A reminder to all participants, anyone who wishes to ask a question may press star and 1 on the touchtone telephone. The next question is from the line of Rishikesh Raut as an individual investor. Please go ahead.
Yeah, sir, I wanted to ask about the cash receivables. Can you talk more about that? Why is that growing?
Receivables, you are saying?
Yeah.
So receivables, if you see, this is only 5 days, not even 5 days, 4.5 days increase in last year. So I think keeping the volume in mind, which is increasing, so 5 days is nothing. And if you see the working capital days, it's not even 3 days. 3 days more than the last year. So 104 days were last year and 108 days are now in the days receivable, and working capital days 92 days was earlier and now it is 95.
Okay, sir. Also on the trade receivables,
Yeah, that's what I said. Trade receivable only I said. If you calculate it, it is 108 days.
You're talking about absolute number, or you're talking about days?
The absolute numbers.
Absolute number. Nipun, they're talking about absolute.
If absolute number also, if you're saying, we generally, we have to see like how many days receivable are there. So absolute number will keep on increasing when you are increasing the volume. Again, if you'll see the increase in, when you'll see the increase in volume.
Okay, thank you.
So it should be in the range of the number of days should be kept in mind.
Sorry to interrupt,
Is there
Rishikesh.
anything? Yeah.
He's done.
Yeah.
Thank you.
I think
The
he's
next
done.
question, The next question is from the line of Avnish Bardhan from Vaikarya Consultants. Please go ahead. Hello, Avnish. Sorry to interrupt. Excuse me. Avnish, you there?
Yeah, can you hear me?
Yes, you're loud and
Hello.
clear. Please go ahead.
Yeah. Thanks for taking the follow-up. My question was also on the working capital. So if you look at the cash flow, you will find that the cash outflow from the change in working capital is 37 crores for this half versus 19 crores for the full year. And I think that's what the last participant was trying to ask, that your receivable days, inventory days, as well as the other current assets have increased. So if you can throw some light on that. There is a sharp increase in short-term loans and advances. So if you can just, talk about that. Why has that increased?
Sir, due to we have purchased some, like the land was purchased, but the final payment is not done. So, like we have purchased two lands. One as I've told, like intermediate plant, and one is for the corporate R&D center. So one is sitting in the advances side because the registry is still not done.
Okay. And what about receivables have gone up from 103 days to 108 days. Inventories have gone up from 60 to 65. Is there an element of, the reason for that, is that the GST change that happened here or some other?
No, Mr. Amish. This is nothing relating to GST. So that's what I said to the previous participant only, that, if you compare the working capital days, if you add receivable, inventory and reduce the payable days, it is only 3 days increase. So keeping the volume in mind, I think this is marginal.
Okay, fine. Another question was on the standalone. If you look at the standalone P&L, there has been a very sharp gross margin reduction in this half, even if you compare from first half of FY25 or the second half of FY25. What could be the reason for that, and whether it will continue going ahead?
So I'll give you a brief about this. We were anticipating that this question will come. So the only reason this has happened is that total domestic sales, even the branded, has been shifted to Adlai formulation. So we have increased a lot of capacity. We have added a lot of machinery in Adlai plant for domestic meat out, whether it's for CDMO or whether it's for own brands. So now coming on to the Beta standalone, the margins have decreased because the expenses side of the Beta is higher. Now we are taking that plant on the regulatory side. We have prepared 11 products which we are going to file in the regulated markets. So those expenses have been accounted for, and the sales which we used to do from Beta drugs plant, we are doing from Adlai formulation. That's why if you see the Beta margins of Adlai standalone has increased a lot, but Beta has decreased. But this situation will be changed once the sales will start coming from the regulated markets. So as I discussed earlier, we have filed around 16 doses for Mexico. We have filed 4 doses for South Africa. We have filed some good number of doses in Algeria. We have filed good number of doses in Vietnam. This all sales will come in Beta plant. So once this sales will clock in, this margin shift will be totally different. This margin scene will be totally different.
Okay, so how you are foreseeing this is that the Beta drug standalone plant will be used exclusively for export, and the Adlai formulation plant will be used for CDMO and domestic branded business. That's how it's going to be.
Yes. Primarily will be there, but somehow 20-25% of the domestic will be served by Beta, like top CDMO players, where they just want it from the Beta only, since they are also exporting from that side. But primarily, the domestic thing will be done from Adlai formulation, and we are just waiting for all these dossiers approved from different countries, which will be served from Beta now.
Understood. Thank you so much. Yeah.
Thank you. The next question is from the line of Veera as an individual investor. Please go ahead.
Yeah, hi. Could you please elaborate on the licenses that you have received in the last 18 months? And in what stages of product filing slash execution are we there in those geographies?
So I cannot give you the total about including different countries, but we can tell you that we have received 43 new registrations in last 6 months. Then we have filed 80 new dossiers in last 6 months. Then we have also, there are total around 148 dossiers already filed in different countries, different geographies. Plus we have a target to file 150 more dossiers in coming 1.5 years. So the only target is that each and single product in oncology, which we call cytotoxic, especially in the oral side, which become off-patent in different countries. So we want to be at least second or the third generic to enter that market. So the single product has a lot of potential. That's why our focus has shifted entirely from doing a generic business basically to be a second or third generic in that particular country. That's why the shift has paradigmatically shifted from the production has paradigmatically shifted from beta drugs to Adlai formulation. To that Adlai formulation will only be focusing on the domestic market, and beta drug plant will only be kept for the exports. So these are certain registrations. Plus, we are just inducting six new people in the regulatory side, and all the regulatory will be handled from HO now. So all these changes are happening in a very fast track. Even not only this, we have allocated certain budget of close to around 15 odd crores only to get bioequivalence done for good 11 products. Those products are ready. The CDP is already done. Now we are in a process of filing the CRO to get the bioequivalence. Once the BE is done in next 6 to 8 months, we'll be ready with the dossiers and we'll be filing in different countries altogether.
Okay, thank you.
Thank you. A reminder to all participants, anyone who wishes to ask a question may press star and 1 on the touchtone telephone. As there are no further questions, I would now like to hand the conference over to Mr. Rahul Batra for closing comments. Over to you, sir.
Thank you. Thank you so much for taking out time in joining our earnings call. We at Beta will continue to grow at the same pace, backed by our robust pipeline. Our R&D exports will kick off well in the coming 2 years. Thank you again. Have a great weekend. And thank you, Phillip Capital team, for organizing this call.
On behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.